The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. It's Jobs Friday, and we got our number, and we got a little bit of market reaction with higher prices right now in the S&Ps. We were as low as about 54.70 on that number initially, and we get over to the number, and let's do the headlines first. And that number coming in at 142,000. The chart I wanted to show was from CNBC as we kick it off. Now, there's something for everybody in this report. Doesn't quite decide the case. The market can't quite figure out whether the Fed is going to go up 25 basis points come September 18th or if it's going to go up 50 basis points. We have the unemployment rate going down from 4.3 to 4.2%. We have more jobs added this month, 142,000 versus 89,000 jobs added for the month of July. What you do have is you have revisions to the downward side of 80-plus thousand for the prior 2 months, indicative of maybe a little bit of weakness in this market, but nonetheless, you get 142,000 jobs added. Wages going up 0.4% more than they were last month. So imagine, right? On Bloomberg, they were making this case after the number, and I think it's a decent case to make as to why the Fed doesn't have to rush too much to the party in terms of cutting with 50 versus 25. Wages going up more than the market had expected, and wages accelerating from last month, right? Wages, purchasing power, that's going to be a thorn for inflation if we do get a second, third bout with it. But nonetheless, we get 142,000. The market likes that number. What do we got going on? In yields, we give it all back, right? I think you're seeing it. As in, we had some volatility, and originally you had higher price and lower yield, okay? Indicative of the fact, and to pull up the yield right now, that would be indicative that these numbers were pointing to the fact that, yes, the Fed could cut a little bit more than the market was anticipating, but I don't think that's the case, man. We get the 10-year right now at 3.73%, 3.73. When you look at the curve in terms of where we are, you look at the 2-year sitting at 3.71, the 10-year at 3.73 right now, the 2-year down 5 basis points. So even on the short end, we are still right? Lower yield. We hit 115.10, which is remarkable when you look at a daily, how far we've come on this thing. It just keeps making new highs. We're sitting right now at 114.24, and that is a 10-year yield, as I mentioned, that's sitting with a yield of 3.73%. All right, so we get the S&Ps up by 1. We'll go back to a 5-minute chart, see the volatility. We were lower pre-market. Right, on Europe's open, we were lower. You got Europe right now. The DAX basically flat. FTSE flat as well. CAC roll up by 0.2%. You jump over to Asia. We got the Nikkei down 0.7%. Hang Seng is flat right now. The Nifty 50 is down 1.2% over there. And we got our market slightly in the positive, up by 2 points right now. But we are a solid 50 points, almost 1% off of the lows that we had last night. That correlates to the spike low we got on those numbers at 54.70. We're trading right now at 55.14. You jump over to the dollar index. Talk about a move in both directions, right? We drive down to 100.58. You go down 50 pennies, and just like that, we're up 50 pennies. You get it all back like nothing happened right now. That's what's happened in yields. That's what's happened in the dollar as well. The first move is not always the move that always carries throughout the day. And yeah, gold, similar action, right? Gold up to 25.60. We're back to 25.41 right now. And let's get into some more of those numbers. So as I mentioned, right, that's not going to be what we want. Let's see. Let me find the, there we go. When you look at the totality of this data, though, in the same way, okay, yes, we're upticking. You're at 142,000, more jobs than were created in June and July and April. okay, you're probably bringing the 3-month, 6-month average. I don't know about the 6-month because you get into some months in March where you were pushing 310,000, but probably above the average, right? Bringing the average up on a 3-month basis. Unemployment rate ticking down to 4.2%, but the trend is lower, right? 3 out of the last 5 months, you got 100, 118, and 89. We come in at 142. There's nothing saying that this one won't get a revision to the downward side as well. And then you look at the unemployment rate ticking down, but on its way up on an average basis. And this is why the Fed probably has room to go 25, but it's probably time to go 25. It's tough to make the case that it's an emergency when we have the unemployment rate going down from 4.3 to 4.2, right? When we have wages going up more in the month of August than they were in July. Yeah. So August numbers were close to expectations. Previous 2 months, substantial revisions. July's total got cut by 25,000. June fell to 118, a revision of 61,000. So you got a number like there in June, okay? Excuse me, June came in at 179 previously. Now, 118. Yeah. Construction leading the way, 34,000 jobs. Healthcare, 31,000 jobs. Social assistance, 13,000. Manufacturing lost 24,000 on the month. And then wages. Average hourly earnings up by 0.4% on the month and 3.8% from a year ago. Both above expectations. Hours worked edging up as well to 34.3. And yes, now these are your year-over-year average hourly earnings, okay? And again, we're getting an uptick, but the totality of the data, you know, don't be swayed by the one uptick, but if anything, the one uptick might just give enough room to say, you know, this talk of 50 basis points, okay, it's not like this market is tanking. You have a year-over-year average hourly earnings in the U.S. upticking from 3.6 in July to 3.8%, going up. You have the unemployment rate going down from 4.3 to 4.2. We do miss, though, right? The market was looking for 160,000 plus jobs added. You come in at 142,000, but you have downward revisions of 86,000. So in reality, you only get a net add of 60,000 jobs, more than we thought, right? You take away the 86,000 from the prior 2 months, you add the 142 for the month of August, and on a net basis, you're only talking about 60,000 more jobs added than we knew of as of yesterday morning. When you combine in those revisions, the totality of the data pointing to some slowing here, but boy, you know, you add up the totality of all the data, and it would be hard-pressed to make that case that it's time to go for 50. Yeah, and we got Fed speak back out here as well, as you got New York Fed president trying to get down to the exact headlines. We'll pull it up right after the break. But yeah, John Williams talking about it's time to go for cuts. There he is. Williams' prepared remarks isn't giving any obvious indication as to whether he goes 25 or 50. You might get a signal for that later, though, in some of the comments that he is making out there. But yeah, he's saying it's now appropriate to lower the rates, and that was going to come out before we just got the data we just got. Yeah, now appropriate. All right, folks, we got a lot to talk about. It's Jobs Friday. We got volatility everywhere. We got the S&Ps up by 3. We're going to dig into some of those numbers. We're going to take a look at some of the equities. S&Ps up by 3 on Jobs Friday. Don't go away. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps up by 4 points right now. Digesting the jobs data this morning, we keep our eye on yields. You jump over the 10-year right now. Almost right back to where we were coming into that 830 number. We're trading at 114.26 right now. You jump over the dollar. Dollar had spiked lower. We reclaim those losses. We're actually above where you were trading right now coming into that 830 jobs number. We're back above 101 at 101.12. So we got a little bit of strength coming back into that dollar. That's going to bring gold back. You spiked to 25.60. We're back to 25.41. A little bit of something for a lot of people in this report. We jump over to how the market is pricing this, okay? So back to Bloomberg for a moment. Swaps traders. Now, this was as of 8:45, but I just showed you, right, what this market looks like. Look where 8:45 was even on yields. Let's go to the 2-year, okay? So 8:45, where are we? We're at 114.09. Now, there's a decent move, but nonetheless, 118 basis points is what swaps traders are pricing in of cuts to come from the central bank by the end of the year. That's up from 108 yesterday. Even call it 108, okay? Anywhere between 108 to 118, that number's probably pulled back from that 118 number in the last half hour since this was written at 8:45, okay? But you have to understand, and I know you do, it's just dramatic, how many cuts are priced into this market, even on data like this, When I say data like this, you have the unemployment rate going down. You have wages accelerating, going back up. Yeah. Markets are reading. This was coming right out. Okay. Now this is just strategists. These are just different takes, but it's important to get different takes and highlight what you could see coming down the line. And I agree that, we're talking about the markets are reading that the data is clearing the way for steep interest rate cuts. I think this is reversing right in front of our eyes right now, though. Okay, that's why I'm going over how the market interpreted this right on the heels of the 8 o'clock number, and then things are reversing from where they were, right? 2-year yields fell to the lowest level since August 5th after payrolls. You got the revision of 86,000. Yeah. And you have a little bit of even flattening from that 210 out there as well. 50-50 chance of a half point this month. Now, let's get into the Fed Watch tool. And it is interesting. You take a look at where we are right now. And it's about exactly where it was a day ago. All right. You're talking about almost 50-50 weighted towards a 25 basis point cut. What is more intriguing, though, is when you start going out to December. And this is the one I keep taking a look at. And look at how it's moved just since yesterday. More cuts priced in on this data, okay? The odds that we're at 4 to 4 1/4 are 40% by December. Folks, we're at 5 1/4, 5.5 right now, okay? That number was only 33% yesterday. The market's actually even reading that we might go a full 1.5% by December. That would be 50-50-50. They're putting a 15% chance. A week ago, that was 3%. Look where we were August 30th, and look where we are right now. Right? August 30th, you combine the 4 1/4 to 3, 7 to 4 range. That means you give yourself quite a range. You're only adding up to about a 1 in 4 chance. You add those 21 plus 3%. You add those numbers now, and there's a 55% chance priced into this market that by the time we get to December, the target rate is going to be between 3.75 to 4 1/4%. That is a mammoth, aggressive cutting path for this Fed as we catch quite a little market here. S&Ps, everything was just in the green there for a moment. Now you say, okay, so what do we do with that prognosis, right? That everything is priced into this market. On a 2-year basis, the market right now is pricing in a greater than 50% chance that come December, you're talking about getting almost 1 1/4 to 1.5 percentage points of easing from the Fed, which would mean you're going 50-50-25, maybe going 50-25-50. Is there a possibility that they can go more than that? Yes. Is there a possibility they can go less than that? I would say more so. And that's where you weigh the risks, right? Well, the risks are right now that the yield on the 2-year, let me pull up that yield again, sitting at about 3.7, okay? As the 10 years at 3.73 right now, okay? But the point being is that yields on a 2-year might be going back up as this market recalibrates where we've been. We've seen it happen before. The 2-year is sitting at 3.7 right now. The overnight lending rate is at 5 1/4 to 5.5% right now. Massive cuts priced into that. And it will be interesting to see if we do get a repricing when the Fed possibly does not have to cut to the degree that the market at least once thought. And if that's the case, we've seen it before. Look where we are right now. We were here a year and a half ago. Imagine that, right? Talk about the market getting ahead of itself. We were there a year and a half ago. March of 2023, you had the 2-year pushing 104.12. We're not even at that price level. That was the high right now. And what did you just hit? 104.10. So we were here a year and a half ago. Much easier case to make this time around that the data lines up, that the 2-year deserves to be at this level, but you still see where we are, where the market is. I think it's heavily priced for cuts. And yes, there's always a chance this data is going to deteriorate dramatically. The revisions don't help. If you didn't get the revisions, I'd say there's no way that they're going to go 50. But boy, when you take a look at the net number of jobs added, you're only talking about 60,000. 80,000 in revisions. This number comes in at 146, 142, but nonetheless, we understand that revisions could be coming down the line as well, and we'll see where they go from there. All right, we jump around to some of the action. Let's check out some of the Magnificent Seven reacting to this one. Apple's liking it. Look at that. Up by almost $2. Apple shares from $222.38 yesterday. You're trading above $224 right now. You jump over to Amazon. They had quite a day yesterday. Cantor Fitzgerald initiating coverage with a $230 price target drove them to almost $180. The whole market pulled back overnight. You see the dip there on Amazon to almost $174. And right now, we're basically back to flat right now at $177.81. Microsoft shares, they're flat as well after trading down to almost $400 in the overnight session. You jump over to Tesla. Up to $233.81. We hit a high at $235 yesterday for Tesla. Netflix shares traded at $684 right now. We jump over to Meta. There you go. Meta catching a lift to $521. Salesforce trading at $246 right now. We got 3.5 minutes to go. We check back in on the dollar. Look at this move. Complete reversal, right? We were down to 100.50. We're up to 101.16. Stay tuned, folks. We're coming back. We'll take a look at some yields. We'll take a look at the yen. We'll take a look at gold. We'll go over some equities. We'll come back for the opening bell. S&P's up by 3. Jobs Friday. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the market open on Jobs Friday. S&Ps open up 6 points at 55.18, but we are a far cry from where we came into that number. Market only positive by 6 right now, but we are what? You're talking about almost 55 points, a full percentage point off of where we were trading at about 5 a.m. this morning. You spiked down to that low of 54.70 as well, and we're almost 1 percentage point above there. 55.24. S&P's up by 11. NASDAQ 100 trying to get into the positive. We're 300 points almost off of the lows, though, of 18,700 overnight. We're negative by just, come on, is it going to get there? Negative by half a point. We'll call it flat right now. The NASDAQ 100 Dow up by 71 points, 40,903. And you get the Russell, positive by 2. Bitcoin up about $900. Pretty interesting to see how Bitcoin trades with this market, right? Market trades lower at 3 in the morning. Market spikes a little lower on 8:30. Now you're trading at 57,005. Remarkable. Who would have thought Bitcoin tracking the stock market back in the day? Gold trading at 25.41 right now. We check in on yields. And yeah, we got lower price, higher yield, which is intriguing. Not the first move you got, but we got lower price, higher yield. What's that doing to the dollar? That's putting strength in the dollar as we're back above 101 at 101.11. We jump over to the dollar yen, as I referenced. And you get the yen weakening again to 143.35. You were all the way down to a 141 handle. You take a little bit of a longer term look at that yen. And yeah, just continuing to strengthen. 143.34. Down about 9 pennies right now for the dollar yen. And of course, when you get action in currencies, that's going to contribute to everything. You got the gold contract right now trading at 25.39. Highs out there of 25.70. And we got all the way up to 25.60 on that spike. We're trading at 25.40 right now. All right, and what else we're going to talk about? Let's talk a little bit of John Williams. So Fed Reserve Bank of New York president said it's now appropriate. Interesting that this hit like right after. Now he's scheduled to speak today, and it's not exactly the quiet period yet, even though it's Jobs Friday. He didn't quite have this data, supposedly, right? You wouldn't have access to this data before his prepared remarks were put out there. So these remarks ahead of this data, not reactive to this data. But nonetheless, significant progress toward the Fed's dual goal is what he's talking about with the economy. Now, yeah, what is equipis? I don't know. I can't get that one. There are very few English words that stump me. And inflation on a path to 2%. It's now appropriate to dial down the degree of restrictiveness in the stance of policy by reducing the target range for the federal funds rate. The risks, this is the part I want to get to. The risks of our two goals are now in better balance, and policy needs to adjust to reflect that balance. Okay? He sees the Fed's preferred inflation gauge moderating to around 2.25% this year and to be near 2% next year. Yeah. Characterized the downward movement in inflation as broad-based and clear in the data. Yeah, but no indication in terms of whether you're going 25 or 50, but that news out there as well. All right, we talk a little bit of Bank of America. How about $7 billion? That's where Buffett is on his sale of Bank of America. Excuse me. So he extended the sale of that Bank of America shares in September, reaping a total of almost $7 billion since he started in mid-July. Yeah. In the latest round of transaction disclosed yesterday, liquidated $760 million of the stock since Tuesday. They have an 11% stake valued at almost $35 billion. Now, when they get under 10%, I don't think they have to report this, right? Yeah, if Berkshire keeps selling, there it is. Its stake could soon slide below 10%. That requires it to disclose transactions within a few days. Once he controls less than that, he may wait weeks to reveal transactions, typically offering snapshots after every quarter, as we know, the quarterly filings, right? You jump over to Bank of America shares, BAC. They're down by 0.5%. We take a longer term look at this thing. You know, probably spent the better part of last year sitting around 30. You got up to 40, and I guess he said, you know what, at this price, I'm going to be a seller. Look at this chart, right? He probably remembers these days when he got into Bank of America. He stuck around for quite a ride, and he says, I don't want to be around if this is coming. Because it's intriguing. He's unloading a company like Bank of America at a time when you're going to have the Fed cutting rates. Bank of America is one of the ones that caught a lot of grief for their hold-to-maturity security losses that they have on their balance sheet. So as the Fed begins their cutting, that's going to ease the losses to these banks that they're holding to maturity on their balance sheet. Bank of America, more exposed in their bond portfolio than some of the other banks. But nonetheless, yeah, he's approaching that 10%, and then we'll just hear from him in the quarterly filings. And he's already sold $7 billion, and he's still at a number that's about $35 billion. But yeah, he is selling. How about cheese? You like cheese? I like cheese. Pretty healthy, all things considered. Cheese, some good protein in cheese. You got some fats in there as well, but some healthy fats occasionally. Dairy, not exactly perfect for everybody. But nonetheless, how about it? Americans eat 42 pounds of cheese a year. Excuse me. That caught me off guard a little bit. That's eaten just less than a pound a week, which is remarkable when you think that. So a slice of cheese is about an ounce. Let's just call it, 16 slices of cheese in a pound. And it varies greatly according to how big your slice is, of course. But if you think about it, let's just say you're eating 52 pounds for simple math, all right? So you're eating a pound a week. The number's a little bit less than that. That would be 16 slices of cheese a week, which means you're eating at least a couple slices of cheese every single day for the entire year. 365 days a year is what you're talking about. You gotta love cheese. Dairy processors, how about $4 billion, are planning facilities across the U.S. to meet surging demand. Everyone loves some good cheese. Nice charcuterie board. You gotta love it. Americans' per capita cheese consumption has more than doubled since the government began tracking in 1975. Now, I'm sure a lot of that has to do with the food pyramid, right? Talking about grains and eating no fats and just carbs and how that's changed. Our eating habits have changed, and keto has changed, and low carb has changed. No carbs in cheese. So that's a big part of it, I'm sure. But yeah, facilities for making cheese account for more than half of the $8 billion in the U.S. dairy product projects slated to come online from 2023 to 2026. So you got $8 billion in projects for dairy, and cheese is going to account for half of that. Great Lakes Cheese Company, $700 million on a New York plant. I mean, it makes sense. Just interesting to see 42 pounds of cheese a year. Yeah, in the era, and they talk about it. I didn't even get this part, but it makes sense. In the era of low-fat dieting that boomed through the early 90s, there was a nutritional war on saturated fats. Yeah, many Americans opted instead for products like skim milk and light yogurt until the rising popularity of low-carb diets such as Atkins. Now, here's what I'll say. As somebody that loves, when I'm healthiest, I am eating very low carb. I just feel the best. Carbs are great. Don't get me wrong. I splurge occasionally, obviously. But there's nothing wrong with products like skim milk and light yogurt. You just don't got to fear the fats in the same way that they once pushed out there. But nonetheless, we'll talk some Bank of America. No, we're going to talk some Selena Gomez with makeup. We're going to talk some makeup when we get back. Stay tuned, folks. Talk about billions. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got some volatility right now. Market can't quite figure it out. And just in the last 7 minutes, you had the market trade from a high of 55.32. You dropped down to 55.01. We're trading at 55.07. You're negative by just 3 points. The NASDAQ 100, look at the drop there, right? 920, even 930 right after the opening bell. We're up to 18,967, and boom. You give up almost 200 points. Yeah, just like that, man. We got volatility everywhere in this market. Jump over to the VIX. VIX right now. And that would make sense. This is just like we've gotten over an earnings data point. You're going to take volatility out of that market. We've gotten over a huge economic data point. Less volatility, less unknown, more known, less variables. The VIX pairs some of those gains. We're still sitting at 1971. And you can see a little bit of a spike as we've sold off. And then you get the S&Ps. We're back to positive by 5 points right now. All right, and yeah, how about it, man? I was thinking this morning when I read this early, then man, it's not, you don't need to make the money becoming famous. You need to become famous and then take that fame and push out a product that's worth billions of dollars, whether it's a makeup brand or a tequila brand. You choose. It's going to be one of the two. But it is intriguing, man. You have Kylie Jenner, right? Is she the one with the makeup brand that's like $1 billion or whatever it is? And now you got Selena Gomez, a billionaire, thanks to her beauty brand. I'm not familiar with this beauty makeup line, but guess what? I am not the target customer, so it would make sense. Rare beauty makeup line. Yeah, a billionaire, just like that. 32 years old. She was on the Disney Channel. She's got a music career, of course, worth $1.3 billion. Whew. Yeah. And it isn't, and that's, they even compare it to something like Taylor Swift, who made most of that money, of course, in her touring. But no, she's got the makeup brand. And yeah, it is pretty remarkable. Look at that. More than 80% of her money is just from starting that rare beauty, and you're talking about billions of dollars. Just remarkable how much money's in there. All right, now this one was interesting. I was reading this one last night. Yeah. So out last night, at 9 o'clock on September 5th, last night. And what the journal's talking about here, and I see these ads everywhere, man, and there is a right place for this type of treatment, but testosterone clinics selling virility and everything else that comes with it are popping up everywhere. I'm not sure if you guys, girls see them online. They are absolutely everywhere. You got Joe Rogan touting it, right? All the big influencers out there touting it. But one of the things this article talks about, which you don't hear out there, okay, is infertility and the boost you have for guys maybe in their late 30s, early 40s. They're taking TRT, and then all of a sudden they want to have a baby. And, yeah, that's a problem because it can cause infertility. And check out the spike. Look at this. Testosterone prescriptions, monthly. All right? Now, this one is the big one, I guess. Testosterone Cypionet, how you pronounce those. Look at this run, right? From almost nothing in 2005, over 20 years, to over 500,000. Yeah. Prescriptions for testosterone Cypionet, that's the one in blue in here, okay? A generic form commonly sold by all the clinics that are out there pushing TRT, testosterone replacement therapy, have increased by 8-fold since 2010. When added to branded products, the total number of testosterone is at a record high, according to prescription trackers out there. But what they talk about here, okay, is that, yeah, that basically it's causing infertility issues, and the men aren't aware of it, and it's on a huge spike rise. And, you know, the problem also is that when you come off those drugs, they talk about you can have some real problems there as well. So you're going to be on them forever. So just be careful if you're ever going around there looking for TRT. You know, there's no holy grail. And yes, if you get your testosterone tested and you're super low, that could benefit you as you're coming into your 40s or 30s or wherever you end up. And I am not a doctor, that is for sure. But it is intriguing because I see them everywhere. And, you know, you look at the stats like that, they're pushing it as kind of the holy grail that can do everything, improve your physique, libido, everything. And yes, it can be. But they talk about here that you're seeing a reproductive urologist, right? The number of people coming in on testosterone has skyrocketed. And yeah, so they have problems having kids, which is a bummer, of course. All right, what else do we got pulled up? Yeah, it seems like every day there's an NVIDIA article. Nothing really new in here, but it is intriguing. Somehow the journal figures out how to put them up here. How NVIDIA became the market's most important stock in charts. We like charts, right? There's the one that matters. How did it become the most important stock? Well, there's your chart of the market capitalization from 2023 when OpenAI releases ChatGPT. The run was on. And if anything, I wanted to talk about this because you got to be quick, right? When that happened, and we all remember it, it hit the news waves. Everybody was like, holy cow, look at this thing. But yeah, it started right then. It didn't stop. Market cap change, largest US day one market cap declines. Yeah, NVIDIA. Look at that. Now, you're an extreme growth company that's the most valuable company in the world. The market cap changes to the downside will correlate, of course, but Meta's in there once, Amazon's in there once. Every other day is NVIDIA. That's a little dicey when you get that many days. I mean, you add up those days, that's probably trillions. Now, they've had the big days, too, which aren't in there, right? Here it is. The big days. Top three of NVIDIA, $326 billion. You add the three of these days up, okay? Yeah, and you're talking about $800 billion, something like that, just on 3 days added. Remarkable accelerations. And look at that one, right? Concentration in the S&P 500 by company. It's these companies, folks. It's these companies. You add them all up, and you're above 30%, which is amazing when you think in 2015 they were under 10%. Think of that, okay? The Magnificent Seven make up 32% of the S&P 500. This one was the most startling because you think you're diversified, right? I'm buying a basket of the 500 biggest companies. And don't get me wrong, you are. The S&P 500, the SPY, is complete diversification. You know, yeah, you could go for the Russell 2000 in there. You could throw in international. There are ways to diversify yourself greater outside of that. But it's amazing to think that in 2015, just 9 years ago, that was only 9% of your portfolio. And meanwhile, now it's 32% of your portfolio. Where's the rebalancing? Right? And I don't think you want to get rebalanced. I think these companies are going to own the world, and this is going to keep going. I don't know how you're going to compete on a broad scale in the future when you're competing against AI data farms that control everything and run everything. We'll take a look at some of those more charts when we come back. And look at the trend is continuing, man. Yeah, the first move was not the right move. Look at this. Almost a full point from that spike. We got the 10-year trading down 6.6 now to higher yield. That putting a lift in the dollar at 101.36 right now. We got the S&P's flat, NASDAQ 100 slightly in the red. Stay tuned, folks. One more segment. Don't go away.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps down by 9 points right now. You get the NASDAQ 100 down 175. That's approaching almost 1% in the red there. You take a look. The Dow right now up 165. What's putting a lift in the Dow? Take a look at some of the green. We got a lot of green in the Dow right now. You got Goldman up by 1.2% right now. McDonald's up by 0.7. Home Depot up by 0.6%. United Health up by 0.5%. Merck up. You see all that. Whereas you got Amazon down 0.8%, right? Tech stocks slightly in the red. Microsoft, Cisco down 0.6. Intel down about 0.8%. You take a look at the S&P 500. Broadcom, they're down 10%. That's a problem there. What's going on with Broadcom? Yeah, with their numbers? Yeah, they're out with their numbers. Broadcom down 9.7% or $15. Watch out for that one. What else we got going on? Tesla down 2.5%. They roll over. NVIDIA off by 1.8% right now. Bank of America, Wells Fargo, PayPal, slightly in the red. The day is young, as our man Basil Chapman says. He's coming up next. All right, and what else do we got? We got football back. I was up a little late last night. I couldn't turn this one off, man. Started it a little bit late, right? 8:20, 8:30, 8:40. I think they had some problems. What was it, weather or something? Nonetheless, the game comes down to the final play. The Chiefs, defending world champs, hold off the Ravens. That was a rematch of the AFC title game. And what's remarkable here is that a lot of things, that was the play, and they ruled the guy's toe out, and it was out in a game of inches, man, instead of tying the game, and it's so intriguing. So KC was up by 7 points. Baltimore had the ball on the 10-yard line with one play left. They threw it. They ruled it a touchdown. The guy's toe ended up being on the line, so they called it out, and I'm talking about by a centimeter. But what was remarkable was that if they had scored, Baltimore would have been down 27-26. And they were going to go for 2 right there. Live or die. They weren't going to take it into overtime. They weren't going to do it. Playing in Kansas City, they were going to take the reins, control their own destiny, and go for 2. I find it so intriguing, kind of the game theory in those positions, right? Yeah, they'd rather take that one shot from the 2-yard line, but they didn't get the chance. But football's back, man. Mahomes, KC, they're 1-0. Ravens 0-1, and we got more football tonight. But not yet. We got the stock market. Basil Chapman coming up next with the Tiger Technicians Hour, folks. Have a great Friday. Have a great weekend. We'll see